Ladies and gentlemen, welcome back to the channel. Markets are finally moving higher, and we have some massive new developments to share with you. In fact, it does not look like the economy is plummeting into a recession, as Wall Street has been kind of pricing in recently. This is what we've talked about on the channel consistently. The reason stocks have been selling off and the riskiest areas like small caps and AI and quantum, for an example, have been selling off is because Wall Street was nervous about the economy. Well, today shows that maybe all of that fear was not warranted. Maybe there was way too much fear over the state of the economy. Now, that's one part of today. Donald Trump's tariffs are another part. It looks like the Supreme Court is probably going to reject Trump's tariffs. Now, in principle, I would say if we had no tariffs, that should be a good thing, right? Less inflation, easy cuts from the Fed in that environment, maybe better company margins, less downside pressure on the economy. Like, in theory, that should be really positive. But it could disrupt some expectations a little bit and create a little bit of uncertainty. So we're waiting to hear what the Supreme Court rules, but it looks like they're probably going to reject some of Trump's tariffs at the bare minimum. And in today's episode, we're going to go over all of that. I will share my perspectives and opinions as well. We will cover all of your breaking news for this market that you need to know. In the meantime, before we get into it, hit the like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you guys want to come join the trading community. Come invest with us. Come find these and identify in these, under the radar AI stocks that have massive upside potential, in my opinion. I don't want to buy this stock that everyone loves that is up 1,000% in a year. I want to find the next stock that people don't know about that's going to go up 1,000% in a year, for an example. That is where the real opportunity is, and that's where we are targeting. If you guys want to join it, link down below in the description of today's episode. But with that said, let's get started. Now, you can see today in broader markets, the Russell 2000 is the outperforming index, which has not been a common occurrence in recent times. In recent times, risk on stocks and areas of this market have been coming under a lot of pressure. Well, there's a couple of things that happened today. First and foremost, the jobs report came in better than expected. But first, Russell 2000 is up 1.5% today. NASDAQ is up 1.13%. S&P 500 up 0.76%. And the Dow is up 0.54%. The VIX is also down about 8% today. Bond yields are up 7 basis points. So that's a very strong, that's a big move in bonds. Okay, which Wall Street has been nervous about economic growth and activity and whether or not we're going into a recession. So it's fascinating to see 10-year Treasury yields actually, going up a lot. The small caps going up alongside it. Gold is doing well today. Also, cryptos doing quite well. ADP employment changed today. This is the private payroll number. Came in at 42,000. Okay, 42,000 job ads. Last month, we were at negative 32,000 job ads. That was revised up a little bit to negative 29,000. So not as bad. Still pretty bad last month, but not as bad as we thought. And the consensus for jobs for October was about 22,000. So you came in 20,000 higher than expected, showing the economy is not already in a recession. Okay, so that was big today, and that's what is sending risk assets like small caps higher. Now, the S&P Global Composite PMI came in at 54.6, missing estimates of 54.8, so a little bit weaker there. S&P Global Services PMIs came in at 54.8, missing estimates of 55.2, so a little bit weaker there, but not terrible. Okay. ISM services PMIs came in at 52.4, beating estimates of 50.8. Business activity came in at 54.3, beating estimates of 50.2. Employment came in at 48.2, beating estimates of 47.6. New orders came in at 56.2, beating estimates of 51.0. And ISM services prices came in at 70, beating the estimates of around 69. So stronger than expected economic data across the board today, which is something we really wanted to see. People have been concerned that, again, this government shutdown, it started at a time in which people were already nervous about the economy, and now you have issues with the airports. Now you have 42 million Americans that are not set up to not get food assistance. You have people missing paychecks, like a shit show sandwich. Okay, so to get good economic data, a good jobs report is really what you needed in this market. But beyond that, people really want to see the government reopen, okay? That is what we need at this point. We need the government to reopen, okay? That is the positive catalyst at this point, okay? That is what is going to cause stocks to go up dramatically from here. It's about the government reopening. When that happens, I do expect some pretty significant upside. But first, we're going to have a catalyst. And that is the ruling from the Supreme Court on Trump's tariffs. Now, this headline says Supreme Court justices appear skeptical that Trump tariffs are legal. They say the Supreme Court justices seemed deeply skeptical about the legality of aggressive tariffs imposed by President Donald Trump against most of the world's nations. Conservative and liberal justices sharply questioned Solicitor General D. John Sawyer on the Trump administration's legal justification of the tariffs, which critics say infringes on the power of Congress to tax. Lower federal courts have ruled that Trump lacked the legal authority he cited under the International Emergency Economic Powers Act to impose the so-called reciprocal tariffs on imports from many U.S. trading partners and fentanyl tariffs on products from Canada, China, and Mexico. So here's the deal. Under the act that Trump has been using, the International Emergency Economic Powers Act, you can only tariff things that are of like a national security importance to the country, like semiconductors, that could definitely be tariffed. Medications could definitely be tariffed. But you're going to tariff washing machines, you're going to tariff clothes and furniture and cars. A lot of that stuff, it's really hard to justify tariffs under the International Emergency Economic Powers Act. And so I think you're going to have a situation where some areas the courts are going to allow tariffs, and some areas the court is not going to allow tariffs. Now, Trump obviously says he has a lot of different things that he can do to keep the tariffs enforced. And overall, I think it creates a little bit of uncertainty. And I would imagine if the courts, say these tariffs are illegal and they can't be enforced, I would imagine stocks would like that. But honestly, you just never know in this market. So I'm a little hesitant to say that would be good. Although my first impression would be no tariffs mean less inflation, less economic pain, higher company margins, okay, all of which is good for markets, but it's impossible to know exactly how markets would respond to that. But again, I would think that would be positive for stocks. Now, we do have some earnings today as well. In pre-market today, you had earnings from Novo Nordisk, Humana, McDonald's, Unity, Recursion, Brinks, and others. And then today and after hours, Robinhood, IONQ, AppLovin, AMC, Dutch Bros, Qualcomm, ARM, Snap, Figma, and Elf will be reporting. Senator Mitch McConnell says Republicans won't end the filibuster. So, I don't know. maybe there's no progress on getting the government reopened. Like, any time now, they should just compromise. Donald Trump says he will focus on affordability next year, like making living more affordable, because honestly, it costs money to breathe in America. Donald Trump says that we have a total nincompoop at the Federal Reserve, was recommended by one of my real great people who I never spoke to again, thus calling Jerome Powell a nincompoop. Donald Trump says that South Africa should not be in the G20. And he says he will not be attending the G20 meeting in South Africa. Donald Trump predicts the return of $2 per barrel of gasoline, which, careful what you wish for, because if gas is $2, that probably means you're in some form of economic, shit show. So, yeah. Trump expects GDP growth in Q3 of 4.2% or more, which is wild because there's some estimates that GDP could be negative in Q3 because of the government being shut down. Trump says the stock market has set 40 record highs recently. So yeah, it's definitely a better day for markets today, but there's still a lot of uncertainty. There's still a lot of changes that are going to come. First and foremost, we want to get the government reopened. That's number one. That's going to be great because Wall Street is just nervous that a recession is coming, and it's no surprise, stocks rally today when we got a much better than expected private payroll number. We needed good news. We needed good economic activity, and we ultimately want to see the government reopen. And when that happens, that is going to be a very much positive catalyst for this market. We will start to get economic data again. We will start to have a better understanding of what the economy is doing. Again, that's the Wall Street perspective. I think we can get a really good understanding of the economy from earnings, but Wall Street loves their good old BLS data. So they want to see it. They want to see it. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. And check that link out down below in the description of today's episode to come join the trading community. With that said, I will see you in the next one. Bank of America expects that tariffs will be adding about a 0.5 percentage point to the core PCE measure. So, if tariffs do not go into effect, if they are rejected by the courts, in theory, that should be positive for this market. So in the news today, Schumer reportedly wants a meeting to end the U.S. government shutdown, which this is really what's going to be positive for markets. If we can get the government shutdown over and concluded, then we start to get economic data. Wall Street can relax even more with their growth fears and their growth concerns. Trump is considering backup tariff options. If the IEEPA tariffs fail in court, Trump's team may rely on other laws. Section 122 of the 1974 Trade Act allows 15% tariffs for 150 days to address trade imbalances, possibly followed by targeted tariffs under Section 301, used against unfair trade practices. The Court of International Trade suggests Section 122 could provide a stronger legal basis for global tariffs. The administration could also invoke Section 338 of the 1930 Tariff Act, which permits up to 50% tariffs on countries that discriminate against U.S. trade. So, Trump has other options here, but, we'll see. We'll see what happens. You can see today that the odds have collapsed that the courts are going to rule in Trump's favor on tariffs. Before, 12 hours ago, the odds were around 50%. It was about 50-50. Well, now you're down to a 21% chance that the Supreme Court will rule in favor of Trump's tariffs. Down 36 points this week alone. So, we'll see. Says, I would think it's still reasonable to continue rate cuts. Fed Moran says shelter disinflation is a reason to expect overall inflation easing. Donald Trump says he may be working on a plan with China and Russia to denuclearize. Now, the CNN Fear and Greed Index today is coming in at 27. Let's see if that's right. Wow. Yeah, yesterday we were at 22. Now we're at 27. So you're still like very close to extreme fear. This market is still not great under the surface. Today is a good little rebound to hopefully get things better in the coming days. But there is still a lot of fear out there, and there is still a lot of room for upside as far as a sentiment perspective. Like, people are not bullish on this market. Like, yesterday was kind of a capitulation moment for a lot of retail investors. A lot of retail investors started to say, to hell with this, okay? Small caps and so many areas of this market have just been crashing for well over a month now. And, retail can only take so much emotional exhaustion, which, hopefully you're not investing with emotions, but I know a lot of retail investors do, and that's just how it is. Market momentum is greed. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand is fear, and junk bond demand is currently in extreme fear. If we look at the AI Investor Sentiment Survey, in which the last one we had was 44% bullish, 19.1% neutral, and 36.9% bearish. We are going to be getting a new survey here coming out tomorrow, which is probably going to show a lot of bears. Okay, so just be ready for that. Now, as I reported yesterday, the percent of stocks trading above their 50-day moving average had come all the way down to about 39%. Today, it's recovering a little. Well, it was down to like 37%, 35%, something like that. Today, you're up 4.77%. So yeah, you were at about 35%. So you're going up about 5% of stocks breaking above their 50-day moving average today. Definitely a good sign, but you're still only at 39% of stocks above their 50-day moving average. Still at 61% of stocks below their 50-day moving average. This is still a weak market. But I do believe you have seen a lot of capitulation from retail investors in the last couple of weeks. And when you're getting all of this capitulation by retail investors, it normally means you're very close to making a bottom. And that is potentially what has just happened. We talked about this before, but like the Russell, it typically bottoms during these correction cycles or, fear moments around the 50-day moving average, right? You tend to hit that as support and then bounce back up. Well, that is what has happened, okay? The problem would be is if we break below the 50-day moving average and get a clear structure break that is below about $240.80 or so for IWM, then you could set up downside to the 100-day moving average. But at this point, Wall Street is so fearful about the economy. As we get good economic data that shows the economy is not plummeting into a recession, that's going to be great news. What happens when the courts rule against Trump's tariffs? I don't know, right? That's anyone's guess. I would imagine it would be positive, but who knows? So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Have a great rest of your day, and I will see you in the next one.